It's Market Day Report. Glad you're with us here as we start the trade or prepared to start the trade here on a Wednesday. A couple of interesting notes from yesterday. When you looked at what happened across the row crops yesterday, we saw a lot of green in the markets, at least on the row crop side, with every row crop in positive territory. Even oats, rice, canola, everything finished in positive territory. What about overnight? Let's start with the corn market and see what happened. It was a higher trade with a half-penny gain at $4.30 a bushel in the overnight session. And for soybeans, again, higher yesterday, higher in the overnight, moving above $10.50 at $10.51, up a penny and a quarter. Wheat market, will start with Chicago before we get over to our guest. And December, quarter cent higher, $5.34 and a quarter. Hard red was down a tick at $5.23 and a quarter. And the cotton market, 3 points higher, $67.71. Brian Hoops, President, Midwest Market Solutions. Kind of an odd day yesterday to see that much green.
You know, Tony, it was all on the strength of some fun buying. They were pretty strong buyers as the U.S. dollar fell, and technicals have really improved for corn and soybeans. I have them in the slight uptrending markets, with the wheat market starting to challenge its downtrend and is getting close to breaking out of that. So we are seeing a lot of technical buying, a lot of fun short covering, and that was really the main feature yesterday. Now we were a little bit more subdued so far this morning, traded two-sided in the overnight markets. We do have some harvest delays going on in a good portion of the western corn belt, as rains are starting to fall and will continue to fall through the rest of this week, and that's going to slow down our harvest pace. So basis levels would likely start to improve just a little bit as the pipelines start to slow down. It is good for our winter wheat crop and seeding conditions there. Rain's fallen in parts of Kansas this morning, and will fall into Oklahoma, even maybe Missouri by the weekend. So some needed rains. Some areas maybe don't need the rain right now, more focused on that harvest. And then also coming up Friday, President Trump and Chinese President Xi are expected to meet. Now, they've had discussions about the sale of TikTok, and it looks like they are able to reach an agreement on that. The trade is hoping they can reach an agreement on China buying U.S. soybeans. So we've noted that they have not bought any soybeans this marketing year. This is the time of year that they normally buy something, but it was announced yesterday. There was a private company in Brazil that talked about Brazil's soybean crop, how large it was, about 107 million tons, and they normally buy 10 to 11 million tons of soybeans. So far, they've exported about 11 million more soybeans, almost the same amount that China would buy from us. Brazil has been able to export that many soybeans in addition to what they normally do because of this monster soybean crop in South America.
Yeah, good points there. And I guess a side note here is based on the export weakness here in the U.S. on soybeans, USDA reporting that our shuttles, Union Pacific shuttles, are $250 per car, BNSF averaging $406 per car. Those are big reductions, only because we are not seeing China in the market. All right, let's take a quick break. We'll be back in a moment, and we'll talk livestock markets. This is Market Day Report. So we'll keep an eye on cash cattle trade this week. Already know that asking prices are higher. We were $238 to $240 last week in the north, $240 in the south, and tighter show list this week in both Texas and Nebraska. Kansas a little larger. All right, live cattle futures yesterday settled in the red, losing $1.02 to $233.57 on the October. And you look at that and say it's a dollar loss, but I think important to remember that's only a fraction of what that contract's going for right now. So I guess something to keep in the back of our mind, because we're not trading limit down at this point, and we didn't trade limit down in feeders. Came well off of the lows for the session, And October actually settled higher, up 17 at 354.67. And don't forget, we get a cattle on feed report on Friday. And a week from Friday, we'll get hogs and pigs. And hogs lower nearly across the board yesterday. Brian Hoops, Midwest Market Solutions. All right, a lot of numbers there, but was this pullback really something to be worried about?
Well, you look at the pullback in the futures, it's of course coinciding with the pullback in the cutout values, which we expected would peak after Labor Day. So you look at the cutouts, they were down sharply last night. They've lost about $15 over the last week and $23 in the last 2 weeks. That is taken packer margins from over $100 positive to now $52 in the red. So they're going to cut back on their cash markets, or they're going to cut back on their kills in an effort to prop up those box beef values. And either one or maybe both of those is going to happen this week. We may see a little bit softer cash trade. We also may see packers slow their kill speeds just a little bit. So I don't know that the futures market really falls out of bed already right at this time. We're seeing pretty big discount already. October is at 233 and some change. Cash trade last week at 240. So we've already dialed in some lower cash trade. And then you also have a cattle on feed coming out on Friday. The estimates look to be about 1% less than a year ago for on feed. Placement numbers could be anywhere from 9 to 11% less than a year ago. And that looks to be very supportive to this market. We do note that the cash will probably come down this week and maybe even into the end of this week. But packers at some point here are going to cut those kills or limit the amount of cattle that they're having to buy and play softer money out there in the cash markets.
All right, Brian, quickly before we let you go, FOMC announcement today on Fed rates. Any thoughts?
Well, there's a very high percent chance, around 99%, that they cut interest rates by a quarter point. The question will be, and what trade will be watching, is what is the commentary for future rate cuts? Does the Fed, does Jerome Powell see additional rate cuts coming up in the next several months that will even boost our economy even further and help that stock market continue to move higher, as we've seen new highs here in the last week off of anticipation of a rate cut?
Yeah, not only that, we've seen, let's see, we had another all-time high yesterday in the gold market as well. So maybe a little uncertainty as we move forward. Brian Hoops is with Midwest Market Solutions.